So Tesla has been obviously pretty impressive. We kind of thought there was a decent chance we would see a pretty big run up after the Q3 earnings were announced. That happened, but I think it happened much more vigorously than you or I would have expected. It definitely caught me off guard, but at the same time, looking at what Tesla's business is going to be like 5-10 years from now, I think I'm still a buyer at these levels. I don't know what's going to happen in the short term, but in the long term, it does still feel like there's a ways to go.
I think what's interesting is that the rest of the market today is the NASDAQ is up a lot today to new record highs, and Tesla is kind of going down. It's like going the opposite. I mean, yesterday, I think a lot of the movement was the opposite. Like, it wasn't the NASDAQ and the market sort of flat, and it kind of stayed buoyed up by Tesla almost by itself. And that's like one of the biggest components of the S&P 500 and the NASDAQ. And if it wasn't up 8%, I think those indexes would have been down probably like 1% or something, And then you have some institutional portfolio managers buying more into Tesla over time. The ones that were hesitant in the past, they saw this earnings print and the gross margins, and they're starting to come around finally. Because Tesla's a hard company to figure out. We've said many times. Yeah. So I think there's a number of these types of institutional money managers and portfolio managers that are now forcing their hand to kind of get a piece of Tesla, or they're going to miss. They're realizing they're going to miss out on the biggest potential investing story of our time.
To me, it seems like there's more than just kind of heavy volume of options. And I think, institutional portfolio managers, especially considering kind of the credit rating increase that just happened recently, that makes it kind of easier to invest in, for a lot of those fund managers who don't necessarily have that conviction in Tesla, like you were saying, because they can't do that research. But all of a sudden you see, Tesla, which is a huge component of, whatever benchmark index these portfolio managers get indexed against. And so they've got one of the biggest return components of the S&P 500 or whatever their benchmark index might be is missing from their own portfolio. And so now they're saying, hey, I don't want to, take alpha risk by not having this company. So I'm going to kind of, eliminate that by going equal weight to the S&P 500. So I do think there's a little bit of a cycle there of some index managers adding and this whole gamma squeeze, but it's not clear exactly what's driving this, and we don't know what's going to happen.
I mean, Tesla feels like it got really unhinged. It needs to settle somewhere. Does it continue upward trajectory in the next few days to $1,500 or beyond, or are we in the beginning of a correction right now, back down towards like $1,000 or $900 again? It's hard to say. I mean, nothing would surprise me, because I think the implied volatility in all the Tesla options has gone up tremendously after the move this morning. So options are getting very expensive, and rightly so. I mean, the market makers, hopefully they're learning their lesson with Tesla options, right? They all use the Black-Scholes or binomial version of the Black-Scholes formula or whatever, and a formula is one thing, but when you're talking about like such a disruptive stock like Tesla, I have a hard time believing that it's really accurate.
I completely agree with you. The volatility input into that pricing model is really just adjusted kind of as the trailing however many period, days, whatever that movement looks like. So you've got kind of a backward looking volatility model. 2019, when I started getting into some of the options plays, I couldn't believe the pricing. It's essentially some of the options, assuming that Tesla could 2x, were priced at under $1. And I just thought that was incredibly insane. Yeah. Trying to think about like who's done more for humanity than Elon Musk. It's like I really struggle to think of anybody right now. There's this kind of worldview that look, he's got over $200 billion now, so like that's just too much for anybody to have, so we should take some of it.
I like how he really is forcing the sunlight on it, the transparency, open sourceness, and saying, I want you to post it on Twitter for everyone to review. Put it in writing, put it on Twitter so everyone can review it. Let's all look at it. Moving on to, the next topic, I guess, is like the metaverse. Facebook's renaming themselves. We just had a great interview with a Bloomberg analyst, Matthew Canterbaum. Am I saying it right? Anyone who hasn't seen it, check out our YouTube channel. We just published it this weekend. He's super smart guy. He's been studying Roblox and the gaming space and metaverse for 8+ years as a Bloomberg intelligence analyst. And we talked about Epic Games, Roblox, Minecraft, Tencent.
I think what stuck out to me so much was just all the different kind of ways that it's going to grow. There may be more winners than I had initially thought. So it kind of got me thinking a little bit more that there'll be more of kind of an all boats rising sort of scenario at work.
The other big takeaway in terms of Roblox, though, was that probably one of the biggest things Roblox has going for it is the events, the live concert. He really thinks that's a huge booming industry kind of about to erupt.